And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the stock market news, corporate news, economic news, charts. We love charts as well as always. Price action across commodities, currencies, equities, whatever is on our mind that is running through our daily routine as we kind of navigate the markets, try to understand what's happening out there, and then bring some insight into you guys out there so that you can better make some decisions with your own daily routine. Welcome, welcome, welcome. As always, if you're a veteran of my community, as always, Team Tackle right in the chat, hashtag, that's our official hashtag. And we love promoting our community, and I think it just reflects who we are. If you're brand new to the channel, give that a subscribe, click the thumbs up, click the bell so that you can get alerted whenever we go live and come back and join us each and every day. On today's show, we got a couple of corporate earnings notes, CarMax, Darden, a couple of companies that have been, affected obviously in the last 6 months by the markets as they've been moving. Restaurant stock, can't wait to get Mark's take on that one. But outside of that, unemployment claims, some economic data on new home sales. Powell is still on the hill in that 3-day testimony. We're still trying to figure out what's going on with that. More news out of ByteDance on an injunction, and then upgrades and downgrades. But really, this whole market's been about price action and technical analysis and whatnot. Let's welcome the crew out. We've got Mark, we've got Matt, and we've got myself here, Coach Tim. Matty, how you doing, sir?
Tim, I'm doing good. I think I'm doing better than Powell. I want to start there. Yeah, I think I am definitely doing better than Jay Powell. He looks tired, bro.
Dude, he's got to be tired.
He looks tired.
Dude, but he does have a cushy job that you can't go wrong with.
I have done all I can to support the stock market. What else can I do? What else?
Dude, he can buy stock. Buy stonk, Jay Powell. Buy stonks.
Listen, hashtag save Nicola. Do that.
But that's the Powell has. Listen. When you analyze the Fed's actions over the last 6 months, they really have walked up to the edge. Because there's great debate on whether negative interest rates or yield curve control, whether that is even effective. Really, the only real last thing and last line of defense Jay Powell can do is literally buy equity, something that the Fed has not ruled out if you read between the lines, but certainly is not has been very reticent to do. Most market participants at the bottom of the heart know that if things got too out of hand, the Fed would come in and buy stocks, buy equities, which would create a floor, which would create a rally. But we don't know at what level, right? Is it at S&P 2800? Is it at S&P 2200? You have no idea where that true Fed put is. Everything else they've done, what else can they do but talk?
Well, they did save 300,000 jobs by buying Apple corporate bonds. So if they believe that, in their fairy tale, fake, imaginary world they live in, buying stocks would save 12 million jobs?
Mm-hmm.
Who knows? I just think I have done all I can do. Whatever. Get out of here.
By the way,
go home. Quit.
Real quick.
Fire the Fed. Hashtag end the Fed. Just get them out of here.
I think Cody just did something mistakenly, but probably out of wishful thinking. He set the halftime report as August 24th accidentally. I think a lot of traders, Cody, would like to forget the month of September if they were net long and bullish. For the last 30 days.
Oh, man. August went from 3,200. Oh, my goodness. Cody, we have not seen these low of prices in the stock market since the beginning of August. There you go.
Yeah.
We always go back to
it was by mistake, but it's kind of funny. Yeah, that would have been a better day.
Look at that freight train. Cody with a little bit of a Freudian slip thinking, oh, my book's not doing good the last 3 weeks. Look at that. I just long for the days of consistency in uptrend and correlated status within short-term traders. Oh, it was such a good moment in time.
Mm-hmm.
Went through.
Oh, the long days.
Need to finish my coffee.
No, I get it, dude. I get it. But obviously, I think it's interesting that you did say that, Matt. We were at 32, 37 on the S&P at the beginning of August. So, context does matter. We had the blow off top. We had the downtrend here that is developing. We're now trying to form some support here, guys.
Every now and then, though, I do think it's just good practice. in some of these short-term movements in the marketplace that spook everybody,
Mm-hmm.
to look at that 10-year nice little chart. Nice little chart, random volatility. Look at the volatility over the last couple of years, though.
It's been wild.
Been
Yeah.
crazy train.
Different moments have been absolutely wild. Other moments have been worm burners. And right now we're trying to find some support down here with price action.
Listen,
3,200 was in play, Maddie. Go ahead.
oh, absolutely. But again, when I'm thinking about this, looking at these moments in time that were easy, and obviously Cody just made a little bit of a slip there, like we all wish we could go back to August, but it just reminds me there's a battle going on right now, and I've been saying it for 2 weeks now, but there is a battle going on right now, fighting for support, fighting for even minor levels of support on the intraday chart. Again, when it is difficult, and I said this on Twitter yesterday as well, the easy money was made. Now the hard money is being fought for. Wait till it's easy again. Don't go out there and risk your trading or risk, where you want to be in 6 months or a year from now or 2 years from now, or whatever your financial and personal goals are. Don't risk that in this moment in time. Dip your toe in, certainly. Play around, absolutely. Stock pick, no doubt about that. But when it comes to the financial world right now, there are easy times and there are difficult times. Right now is a difficult time. Wait till it's easy. Wait for those resistance levels to get broken out of. And for the aggressive traders, the technical traders, the step system traders, Team Tackle that's had some, experience out there in the market for years. Yeah, you're going out there and you're being a little bit more aggressive on short-term analysis.
Mm-hmm. Mm-hmm. Marky, how are you approaching the charts right now? How are you seeing them? How are you reading them? And what are you paying attention to?
Man, it's a dance right now, right? Because we've been talking about this all week about this. Like, this can play out in a lot of different ways, and it really can. Every support level that is formed on an intraday chart is tenuous, right? At some point, out of nowhere, support could just start forming because it's tested and then tested again, and for whatever reason, that level is the level that's tested. You're going to have rallies, you're going to have sell-offs. I mean, this is a really, really difficult environment to see how it plays out.
Mm-hmm.
Now, so I mean, and that's on the technical side. What worries me more on the technical side is the sentiment side. And we've been talking about this all week as well, is that as this real, genuine technical battle plays out, what is the spark? Because it's not going to be fiscal stimulus. It's not going to be earnings in the short term. Maybe a month from now, earnings are good, and that alleviates the fears of the market, creates a rally. It's not going to be worries that the election is going to be less contentious, right? And so, where is the sentiment spark that gets people excited? It's probably not coming from the Fed either. The Fed has been really, really, really quiet over this sell-off, with the exception of screaming to the top of their lungs, and we'll get into Fed speak here in a little bit, that we need more fiscal stimulus. So the Fed's not exactly calming the market. Fiscal stimulus out of the government's not there. Traders are on edge. When I watch CNBC, I mean, it is hilarious how over the last couple of days, it's like, well, we're just giving back the August excess. And a lot of them are pointing towards lower prices. And it's like, and so the sentiment out there is really like, where's the spark? And since there's not one on the horizon, that has me worried, which means you have to have a support level hold in the short term for traders to get excited. And so with nothing on the horizon on the sentiment level, it comes down to, as we've been talking about for weeks now, a pure technical battle. And in the short term, bulls have been losing.
Well, and I think that's an excellent point there, Mark, because the year of 2020, I mean, everybody's going to have their story to tell about the year of 2020. There's no doubt about that. But in the financial world, the year of 2020 was a storyline of evolving, themes that played out. in the marketplace. You know, from the pandemic hitting to post-pandemic to the stay-at-home plays to the economy reopening up plays to the combination plays out there. It's just, you know, we called it the swing traders rotation, right? And it was all based on these themes that were developing in the marketplace that you would see play out, you know, where you would see some fairly aggressive and quick price appreciation and some fairly quick and aggressive price depreciation when those themes, you know, puttered out. So when you're talking about that sediment, right? The sediment, what is that sediment? What is the next theme playing out that can really kind of drive these market lows? Well, let's kind of go back to the, you know, economy reopening up themes. Right now, I don't see the economy reopening up theme playing out in the marketplace to really give the market some support. I mean, you're seeing, you know, countries around the world start to increase restrictions. Europe, to name, you know, one of the bigger ones out there, starting to increase restrictions on a potential second wave. We've seen, you know, Boris Johnson in the UK increase restrictions. I mean, they're shutting pubs down at like 10 o'clock in London, guys. I mean, that's a big deal for London, for anybody who's ever been there. So, you know, you're seeing the economy reopening up theme, and it's just not there, right? It's not in the cards with this second wave that is potentially coming at us from around the world. You know, the pandemic plays the growth plays out there, the stay-at-home plays that really kind of just sparked the marketplace in March and April of this year. You know, from Apple to, you know, even Peloton, but the Zooms of the world and so on and so forth. Those stay-at-home plays. Well, at this point, I mean, with the economy really, you know, I don't want to say it's starting to stagnate, but the data from an economic perspective has not been improving to the same degree that we were seeing in, you know, early summer, you know, June and July specifically. So in terms of the stay-at-home plays with restrictions coming at us from around the world, those stay-at-home plays used to be really, really good in these types of environments. But what's happening now on Wall Street, we talked about it yesterday, with now most of corporate America, Wall Street, and the central banks starting to project out to growth in 2023, it's much, much, much more difficult to justify the high price even today on some of those pandemic plays and the stay-at-home plays, given where they're at today versus where they were at even 6 months ago from a fundamental perspective. So I'm looking at this theme and what could that sentiment be, to go on your initial point, Mark. I don't know where it's at, not with the election so close to us, and a very, very hotly contested and volatile election that is driving everybody in the world crazy, and just everybody wants it done with, just get it over with. And so is there any other theme that could develop in the next, say, 45 days that could really spark? And I'm not saying the market won't go up. I'm just saying that, is there any theme that could really, the market could just start gravitating to and be like, okay, we're buying this for this reason in front of the election? I have a hard time at this point seeing that play out.
And that's the biggest thing. And I was jotting down things like while you were talking, Matt, because I mean, that is really where my mind's been at for the last week, because the technical battle, obviously, but like, you know, the economy reopening. I mean, yeah, earnings, that's a month away. And even when earnings come in, right, you're going to be right on the precipice of,
yeah, you're talking weeks before the election right then.
You know, the Fed is sitting on their hands. The stimulus bill's not deal. I mean, maybe if a true vaccine truly was like,
not gonna happen, not gonna happen.
But that's not going to happen in the next
Trump
month,
and the FDA
right?
are already fighting politically over the standards for releasing a vaccine, so that's not going to happen. And right now, guys, I saw a national poll last night that said 72% of people don't trust a vaccine at this point.
And then the other,
it's a big problem.
And it was a real theme. The stonks only go up, right? And that euphoria, you know, and that's what we talked about.
That for weeks.
No, and that's what we talked about in the Bear Porn newsletter. And when Tim interviewed me for the podcast, my biggest worry in the short term, and it has been playing out prophetically, is that you get a sell-off, and then individuals that hadn't experienced a sell-off all of a sudden, and you see it in Davy day traders' face these days, have no idea how to handle it because they don't truly have fundamental conviction that stocks.
And they've also not truly been through anything like this, because in their world, stocks just go up. But anybody that's been around the market longer than a baby understands that stocks don't just go up. That's not the market mechanic. And you talked about the Fed. I mean, talking about those plays and whatnot. And I still believe in the Fed put there. But if you've listened to anything Jay Powell's talking about, he's like, what else do you want us to do, guys? I mean, we increased the balance sheet by over $3 trillion. We started all these different programs. We bought corporate bonds, for God's sake. We're at zero interest rate policy with an effective negative interest rate policy. What do you want us to do? So you can't rely on the Fed in the next 6 weeks to come in and be like, we're going to be the buyers of things. Fiscal stimulus, I mean, is a crapshoot right now. It's a pie in the sky analysis. Maybe it gets so bad out there that Democrats and Republicans actually have to put Americans first. I don't know. I doubt it. So I don't see fiscal stimulus. I don't see monetary stimulus coming at us. The themes that have been dominated in the marketplace over the course of the last 6 to 8 months, it's really hard to see that continuing to play out with the economy, with the potential second wave happening, with the Wall Street, starting to see valuation and the growth mechanics of 2023 is concerning. It's a difficult environment. It just is. And I said the word yesterday. I said it's cloudy, and I'm going to keep saying that it's cloudy. It's hard to see. It's hard to project out there. And when you get to that degree, and again, it doesn't mean there's not plays out there. We're gonna have great plays, great stocks in the options.
There's great
report,
charts
in the stock report. There is great stocks out there from a bullish and a bearish perspective. I'm not talking about that. I'm talking about the entire market and Mr. Market being the psychology of the marketplace. It's hard to project out. It doesn't mean it's not going to happen. It doesn't mean that the Fed's not going to come in to save the day. It doesn't mean that the government might get their act together and do something for the people. That's not what it means. Any variable exists, can play out. There's no doubt about that. It's just hard to see a map to see that playing out with a probability. And so in that environment, I think you got to trust your eyes. For me, if I didn't do the halftime report, I wouldn't be reading any news right now. Like literally, I would not be reading any news.
There's no point.
There is no point to it, none whatsoever. I'd be focusing like a hawk on these intraday charts right now. And it's par for the course. We know how to work this now, right? Increasing volatility, increasing certainty, lower position size, reduce the risk exposure in the portfolio, and shorten your time frames and shorten your position size. That's the playbook right now.
No, I mean, because we have all the information. I mean, I guess if I wasn't doing the halftime report, I would be on a news blackout. And maybe if the SPY was up like 3.5%, I'd go check to see if they'd passed a fiscal stimulus or something like that, right? Because we know all of the storylines. I mean, we know all of the storylines, and it's just a matter of how this plays out. And, it's one of those things, two things. One, I do believe stocks always go up over the long term, right? I mean, the SPY could be at, 324 today and go down 20%, and one day it will be above that level.
Yeah, it just might be 10 years from now you recover.
Right. and so that's why you have to have fundamental conviction. Another thought, and it's on the souring sentiment. I love what is the 5 o'clock show on CNBC, 5 o'clock Eastern, Fast Money.
Is that Fast Money?
If you watch the rest of CNBC, can be really
Fast Money's good. I like Fast Money too.
Fast Money. I love the guy. I love the guys. I love Karen on there. I love the whole crew. I think they
have a good dynamic. Fast Money's a good show.
They have, and I really respect, having watched them for years, I respect the diversity of opinion. And there's a guy I didn't. Guy Adami. Of course. Listen, Guy Adami is this sarcastic, I like Guy Adami. He's my favorite. But Steve Grasso, who I didn't used to like, but I've really come to like Steve as well. He just not my personality type, but I think Steve Grasso is really a good bellwether of the trading pit, of your average investor. And I think he portrays that. And he thinks he thinks this shakes out down to 2,800 on the SPY.
Well, let's take a look at that real quick, Mark, on the technical chart here, because you got some battle zones, you got some trench warfare going on right now, and so you do have some battle zones from a support level perspective all the way down to 2,800, and let's put a target on that 2,800 zone, and I could certainly see 2,800, being in play to a certain extent, but there's some ifs to that. 2,800 is where this old little support level, right when you reclaimed all your moving averages. Right now, you're fighting for a very, very short-term level of support right now. And I'm talking currently this marketplace today. Yesterday, I said and I believe, coming back down to this 30-minute chart, yesterday I said, if this level is broken right here, right there, you're going to see 34, 33, 35, I believe. You're going to see 3,200. Look what happened right there at 3,200. That 3,200 level coincides with a couple different historical price points. Number one, it's an old support resistance zone over here. So it's horizontal support. Number two, it's a significant whole number. If there's anything this market has loved more than significant whole numbers, what would be the second thing it's loved? Moving averages?
MA's pretty
Yeah, it's
consistent.
probably moving averages, I'd say. So moving averages and significant whole numbers have been a bedrock of support and resistance in this market condition. So it's a horizontal support level at 3,200. You also have it right there, I don't have it on my chart, but it's smack dab kissing off the 100-day moving average, which Mark is one of Mark's core moving averages as well. So you're sitting at an intraday level of support, horizontal support. You also have the 100 SMA right there as well. If that level is broken, there's nothing there until you get down to that 3,100 level, which is the 200-day moving average. I just feel like we're going to have a battle there, right? I just feel like we're going to have a battle.
And the Kramer crew, the technicians he brings onto the Kramer crew, and Fast Money had a technician on. It was Fast Money that had the technician on, and he's like, listen, we are going to have a major battle at 3,000, 3,100.
I agree with that.
Like he said, listen, I don't know what it's going to do the next few days. I don't know what it's going to do next week. But he said in October, I would be really surprised if a major battle on the technical charts don't occur at 3,000 or 3,100 in that range. And I think that battle is going to play out. I think it's going to be significant.
Oh, man. Now I'm all into like major historical battles. Like, is this the Battle of the Bulge? Or is this Custer's last stand? I mean, what type of battle are we talking about here?
My hope in the way I've been positioning myself, because I don't know, right? I still have some long delta. It's covered with covered calls. I've been very aggressive, even rolling them out a little bit in time to get more premium in case this does break down. And if everything goes back up, hey, great, I made some money, no big deal, because you don't know. I mean, and I said this to Tim the other day, if this was a 5-minute chart, I would be already short. The problem is when you get to longer time frames, because the pattern is a classic lowering moving average slap down. And so if this was a 5-minute chart, I'd be like, oh yeah, I'd have already been short on a day trade. The problem is you don't know what the news cycle is going to be, right? And you don't know what the news cycle is going to be on Friday or next week. And so that puts a little bit of problems on that. But like can we throw some Fibonacci's on there?
No, don't.
Do we have to?
Do not ruin my day. But I do want to explore your.
But no, I want to know where that 50% retracement level is.
It's already broken it.
So, no, I mean from the March lows to the highs.
I will give you a Fibonacci. How's that?
Because I want to know, and I'm trying to.
There's your first Fibonacci. No. You're at. Hold on. You wanted Fibonacci. You're not going to get your random Fibonacci that justifies your price. You're going to get a legit Fibonacci here. So you're currently at 61% on your retracement off the price movement of the original price movement that started with the double bottom at 3,000, a kiss off the 50-day moving average. you're at that last degree of support level on your Fibonacci. Now, 61.8%, it's a deeper retracement. Typically, you don't see momentum above the previous high, but everybody would take the previous high right now and just call it good. So in terms of this, you're sitting right there at that 61.8%. If you're looking at it from a longer term perspective, right? If you're looking at it from, say, the lows, right? So let's go ahead and remove the old drawings here. Oh, I got to remove that. So let's remove that drawing. And if you want to go from the March lows to the highs, you're not even close to a 50% retracement.
Mm-hmm.
Yeah, no, and so on the way down, and this plays a lot in how I position my naked puts and levels. I mean, you have, and this is encouraging for bulls. You have so many different battle zones. So one right now is occurring at 3,200, which aligns with the 100-day moving average and that Fibonacci level. You got that 200-day moving average. You got the 3,000 level. You got the 50% retracement level at 2,900. You got the 20 weekly that is coming up for a potential test. So you got a lot of layers that can act as support all over the place from a technical perspective. And so like one of them eventually will stick unless there is just true panic selling.
Mm-hmm.
True panic selling.
We haven't seen that yet,
but we haven't seen that yet.
Okay,
not even
so
close.
People that are new to the market, you haven't seen true selling yet. You haven't seen it. This is not panic selling.
Oh, not even close.
You want to see panic selling? That's panic selling. Yeah. This type of speed is panic selling. When everybody is like closing out positions or they're going to lose everything, that's panic selling. This is profit taking / where's the rationale to buy. This is lacking buying conviction. This is not panic selling.
And you have Wall Street lining up, and whether it is that 50% retracement level that Steve Grasso says at 2,850, or the other technicians that you see on CNBC at 33,000 or 3,100, or just 20 weeklies, or the one you're just experiencing right now at 3,200, you have different people that are going to come in and make a stand that will see this as a buying opportunity that could create, at a minimum, short-term support that lasts maybe a couple weeks, right? Even if we gradually work our way down, that's encouraging from a bullish standpoint. The number of levels it has to get through, that as long as there isn't panic selling, and once again, we don't really have a panic theme. And that's encouraging on this sell-off, because back in February and March, we were on this show saying, get the hell out of stocks. Get the hell out of stocks. COVID's real. This is going to, and so that's not the tone you're hearing from us, because we don't have an event. This is a good old fashioned valuation is too high, technical sell-off. I don't have fundamental conviction. And that is a much healthier sell-off that at some point, assuming we don't have something major happen along the way, then all bets off, right? But as long as we don't have something major way, eventually a support level sticks. It just does in the short term.
Yeah. And you got to look at that 3,200 level, and you got to, okay, again, patience, caution's the words of the day, no doubt. But you got to look at that 3,200 level and let this shake out first, right? I personally believe we're going to see more downward movements in price here until I start to see double bottoms, double tops type analysis. You got to have a projection to the downside. You can't hope price goes up. But I'm looking at that 3,200 level as a potential support catalyst, but I got to see it confirm. I got to see it confirm. And then we got to see it reclaim moving averages. There's no doubt about that. But 3,200 is your first stepping stone, your first support battle. Next, I mean, you break that, you are talking 3,100 by 3,000 at that point. Absolutely 100%. It doesn't take long to get down there if it wants it. So before we start talking about 2,800, there's a lot of battles to be had here. I think the number one battle is that 200-day moving average. That's the line in the sand for the long-term investors. The investors are going to buy, or going to look to buy in those opportunities. I mean, look at Google today, for example, guys. What's Google doing?
Testing 200. I saw that too. Yeah.
Like kissing off that fighting for that 200-day moving average, because what happens if you get under it?
Well, I mean,
That
go back to the ES, the last 200 battle we had on the way down in COVID. Even in the height of all of the, like, it was a crazy time, right?
Mm-hmm.
I
It
mean,
was volatile.
it was a vicious battle for a week plus. What was that? About 7 trading sessions before it finally capitulated. Got slapped down by my girlfriend, right? You know, it was like battle of the 200. Give me a few days to catch
Your
up. And then my
girlfriend
girlfriend
is so
said,
vicious.
you know, like, listen, like, yeah, this isn't real. Slap down. So, I mean, along the way, you're going to have, in my opinion, even if we have a move that's another 10, 12% down, you're going to have a lot of time where bulls make ferocious stands, where it takes a couple weeks off. That could give you some strategic time to decide what you want to do with puts, with calls, with positioning. I mean, listen, this has been fascinating theater for 3 weeks. I imagine the next 6 weeks heading into the election are going to be the same.
Well, and I want to get your thoughts on that, Mark, because as you guys have been talking, I love the technical breakdown, by the way, guys. And this really has been the theme we've had in the show here for a while. The technicals are really what's driving it. We're aware of the risk. It's a time for caution, all that kind of stuff. But Mark, you said something a minute ago that grabbed my attention. Number one, you're still long equity. You know, I think that's an important lesson for people out there. The tone of your voice, I mean, you're concerned about a potential correction down to the 200, potentially lower, all that kind of stuff. But you're still long
Listen,
equity. You're still naked.
Is there
put.
any time you guys are not long equity?
Well, and I think that's the point I want to get to.
COVID,
right?
during COVID, I was cash only. So
Cash only.
So even with your concern about, guys, Mark, you brought up a number 2,800, that'd be 450 points. We're talking about another 15% correction, bear market territory. Even with your utmost concern, and that's what traders do, they've got to identify risk. You're still trading the way that you trade your system, and you're approaching it just from a trying to manage risk standpoint. I mean, talk a little bit about that, Mark, because I don't want to have the wrong framing out there,
Well, yeah, for me, it is, I do 2 things well. I am not the world's greatest swing trader. Like, if there is like a no-brainer, oh my gosh, that is a high base no-brainer pattern, I will take advantage of my knowledge in that. But my personality is suited for 2 time frames. Day trading, really short, in and out, base 100% on technicals, and then this long game, this long game. And so day trading, I'll do anything, right? Up, down, I don't care. I'm just reading a chart, and sometimes I'll be right, sometimes I'll be wrong. But long positioning, I mean, I believe, and I'm a long-term bull, and I'm an only bull kind of guy. I believe that the federal powers that be, whether it is the Fed or the government, will do everything they can to prop up the stock market. Now, they're taking a little breather right now, right? Because they're wrangling with one another. Eventually that comes around. I think a stimulus deal will happen. Might not be till January 2021, might not be till February 2021. But eventually, unless there is blood in the streets, which let's hope that doesn't happen, they're going to come and come aside. I also believe that the Fed, and we have a lot of evidence of that over the last 12 years, are going to be totally accommodative in their monetary policy and do everything they can to promote stability. But stability doesn't mean stonks only go up. Stability means stability. I just don't know what level that happens. And so at some point, whether it's an individual company or the market itself, this is a great price. I'm willing to stick it. And if I get put shares or if I buy shares at that level, it's because I have this long-term vision that this is a great deal. Doesn't mean I'll make money on that this month or this quarter, but I think this is a great price for a market or an individual stock. And so, when we're reading the short-term price movement, of course, I'm going to try to be as greedy as I humanly can. And in times where there is volatility and a precarious situation on the chart, I'm going to be careful. But if I see great value in something, I'm going to take advantage of that, even if I think I might have a little downward potential. For an example of this, I sold a November put on the SPY a couple days ago when things were breaking down. I like the volatility and I like the level. Now it was cleared down at 2,400, right? But if I get put those shares, I'm happy to take ownership of that, even if it goes to 22 or 21, because of the general framework in which I position myself for long term. But in the short term, I mean, it's a matter of letting the chart from the top down analysis, and Matt and I are like hardcore top down market first analysis, because it's hard to swim upstream if the fish, it's like the old trout, like that swims upstream to go to their breeding ground. It's really hard to swim upstream if the market is going the other direction. And so it's this balancing act as a bull of, do I believe in the price long term? Do I think I have a great investment, even if it goes down in the short term at this price level? And then navigating carefully that you don't get over leveraged, like Tyler talked about a couple days, that if it goes down even further, you got a few bullets in the chamber to buy even a further discount. And so it's a fine balancing act. It's easy. What's that saying you've been using lately, Matt? The easy money was made, and now
the easy money was made. Now the hard money is being fought for.
And so, like in the easy money times, it's easy, right? Whether you're swing trading, position trading, doing naked puts, and trying to find bargains. Like, I mean, it's easy. Like it's easy. This is hard. This is not easy, even for someone experienced, even for someone that has a plan, because it takes, gosh dang. I mean, I so wanted to add bearish exposure this morning, but I'm like, because the emotions are there, but I'm like, all right, I'm at a support level that might hold. Wait till that breaks, or wait till you have a rally and then get a bearish retracement to do that. I mean, this is not easy. And this is definitely a time that if someone has been trading a few months, man, wait for those easier times. Wait for those easier times, because they'll be here. They always eventually come again.
Yeah, it's normal price action of back and forth, and have to actually fight over price, no question about it. One thing I find interesting, and Matt, I wanted to get your take on just the price action from the cash open here today. I mean, obviously we're still below daily moving averages. We're fighting over this 3,200. But if there's one thing, bulls are looking for a glimmer of hope here. Don't you like at least the price action from the open? Because we have been buying up off that level since we started the day.
Oh yeah, you gotta like it. There's no doubt about that. I mean, and initially, I've talked about this quite a bit. Initially, you have these telltale signs initially that you're looking for to see support really hold. And it first starts by looking at, okay, where can support hold, right? And you have these different degrees of support catalysts. You have moving averages. You have, obviously Fibonacci retracement levels. You have, significant hold numbers like the 3,200. You have horizontal previous pivot levels. You have these different levels such as trend lines that can act as hypothetical support. They're not support, they're known as catalysts, right? They have the ability to be those predetermined price points on the chart that can act as a support level. And so you really prepare for the market and Mark, I love what you said about the top down approach, because yeah, I am a hardcore top down analyst. There's no doubt about that. My bias to the market really does dictate kind of what I do. There's no doubt about that. You got to run with the bulls here. You got to run with them. So in terms of this, I look at these support levels, and then you're looking at it from a momentum perspective. You want to see those bounces happen. So step one, I'm going to drop this down into that 15-minute chart to see a little bit more of a tighter angle. And what do you have? You have a little bit of slowing momentum in trend. You had the failed breakdown of the intraday trend on the overnight action that happened in the pre-market today. So right here at about 6:30 a.m. Eastern Standard Time, we did have some economic reports come out, but it showed a little bit of downward movement in price. You tried to break through that support level at 32.11. You did, but where did you come down into? Right smack dab into the daily support level at 3,200. You see your slowing momentum. You see your upward movement in price at 3,200, and then you violate the neckline. And what the neckline is, it's the resistance channel within a reversal pattern. So from an intraday perspective, you're seeing what you want from a confirmation perspective. But at that point, you got to come back to the daily chart and say, okay, we're getting what we want initially from the support bounce. But that's not daily confirmation. That's not at all. You're still looking at a bearish downtrend. You still have failed pivots to the downside. You still have a lower low, lower high scenario on the chart. And so you're seeing what you want initially, but you can't just start, being aggressive until you see that daily price action reverse. And so for me, yes, this is step one, but it's step one within like a 7-step process for a potential confirmation.
Mhm.
So again, you like what you see as a bull in the market today. You do. But how many times have I said in the last week and a half, you're seeing what you want initially, but we haven't seen any follow through. You have yet to see one resistance level actually get broken on a daily chart. Not one. And so initially you're looking at the intraday chart, you're saying, I like it, but now you're looking at the daily chart, you're saying, okay, I got to see a resistance level broken. I got to see it reclaim the 9 EMA. At a minimum, we got to see it reclaim the 9 EMA.
I call these reprieve days. Like, they don't tell you anything about who's going to win this battle over the next 6 weeks, right? But they're a nice reprieve day. It's like, remember that we had that nice reprieve rally heading into on the Friday where the market's like, I'm going to worry about this. I mean, what didn't it happen on that big green candle on like 9/7 the Friday where it just went crazy, right? Like, and it was nice, man. It was nice going to a 3-day Labor Day weekend and not have to worry about the market because you got a nice reprieve day. That's what these days are right now. This isn't on a catalyst. This isn't on any of those things we talked about. There's no news. In fact, let me give you the market headline today. And I've been loving, oh my gosh, even as my account's been going a little bit in the red in this week, I've loved the headlines. Headline today out of Market Watch. S&P joins NASDAQ in positive territory after soft opening. They got nothing this week.
I saw
they got nothing.
Stocks ripping higher. And I'm like, oh gosh.
So, I mean, these are reprieve days. They are just, but it's a chapter and they're nice, right? Another day of theta, another day to think through, another day to contemplate what you want to do, another day to evaluate things. So they're beautiful days, even in a downtrend. But my goodness gracious, until we get a sentiment spark or a true technical resistance break, you got falling moving averages, my friend.
Breaking news. Stocks don't just go down in bearish downtrends.
But these reprieve days are beautiful. I love them. Even if price continues to go lower, they're really nice.
My daily routine in the morning, I have been chuckling more and more and more every day in the last week and a half, 2 weeks, because the headlines just are so funny.
Oh, they've punted this week.
So
it's
funny.
Great.
They're so funny. It's like you could tell, like in their meetings, like, what am I going to do here? What headline am I going to give? Johnny, you got an idea on a headline I'm going to get? Stocks ripping higher. It's like, okay, stocks ripping higher.
They got nothing. They got nothing. So.
Yeah, and it is kind of funny to obviously track those financial news firms because they're not really reading charts. I wish they would do more with technical analysis. I mean, the real value in what is happening in this market, and you guys have been all over it for 2-3 weeks, is the technical battles that are happening.
Listen,
they're not trained on technical
analysis. We can sit there and throw
analysis.
shade on all the news organizations all day long, but the simple reality, guys, is we know what works in the world. And when you put, stocks bouncing off a horizontal 3,200 level of support, nobody clicks on the headline.
It's not going to be a clickbait.
So we can blame the media, and certainly we can. There's no doubt about that. But people are fickle.
Yeah, it's true. Mark, you had some interest in bringing up the 100-day simple moving average today as well. I know that you are the moving average king. And obviously you've done a lot of studies with that. We've been introduced to your girlfriend, the 9 EMA, over the last couple of years. I think a lot of Team Tackle very appreciative of that. What was it about the 100 SMA that you wanted to bring up?
Well, I mean, it's just another potential support layer. I mean, so whether it's Fibonacci's or major moving averages, either on monthly, weekly, hourly, daily charts, horizontal support levels, there's a battle brewing. And so I just like, where are battle lines happening, right? Is bouncing off the 100 today. Gold's bouncing off the 100. Bitcoin's been bouncing off the 100, like, doing a little dance for about 3 weeks. And so I just like to know where the battles are occurring right now, where the battles could be occurring if that battle loses. Now, if it wins, right? If the 100 wins, or this 3,200 level, whatever you want to use, if it wins and it doesn't go lower, everything's easy.
Just another potential catalyst. Gotcha.
Because eventually it will bounce, and it might take 2 or 3 tests or 4 tests or whatever, but eventually it will go up if that support level doesn't break. And so it's just analyzing where the battles are occurring right now.
Just where those catalysts could be coming in. Gotcha. We also had some economic data here today, Matt. New home sales, unemployment claims, a couple other things. Did anything grab your attention? I know the unemployment claims came in below the $1 million mark and whatnot. Any of those numbers grab your attention at all?
New home sales, record number since 06. I mean, they got a supply problem now. They're running out of it. It's so strong in residential. Cheap residential housing has been, and cheap is a relative word. It's a subjective word, but in lower income residential housing, it's been as robust as you've seen. It really is. And so can that continue into 2021? I have my doubts, but initial claims, what do you want me to say? I don't trust the data. So
yeah.
The only thing important to the initial claims report at this point is figuring out how Wall Street interprets the data. That's the only thing that's important. And right now, today, Wall Street, there's no interpretation. They missed the number. It actually expanded. Market went up. We do not know yet. We do not know how Wall Street's going to interpret the new initial claims data. So we're going to need more data points, honestly, to see how Wall Street adapts to the new data. But I don't think I'm the only one in the trading world that's like, who cares about initial claims any longer?
Well, I think it's one of the problems.
When you manipulate the data to fit a certain theme, I'm out. Done. So initial claims, it's not an important economic data point any longer, in my opinion, because of the way that the data is being manipulated to fit the time.
Yeah.
So in terms of that,
even the manipulated data is terrible.
Yeah, even the manipulated data, they're going to have to find a better way to manipulate the data. But in terms of that, no, I don't think the data has a true economic indicator anymore because it's manipulated. So in terms of that, it does have a stock market implication. But as of right now, since we're only 2-3 weeks into the change in the data, the way the initial claims report kind of handles initial claims data, we don't know how Wall Street has adapted to the new report. So to me, I think we need more data to see how Wall Street performs on this report. But as of right now, I could care less about initial claims.
Yeah, I feel like the collectiveness of the markets is also kind of moving towards that direction, Matt. Like you said, the claims data is terrible. The market doesn't care. The market is moving on, even
because it really doesn't matter. I mean, because 868,000 or 1 million or however you want to judge it, lost jobs and filed. So I mean, that's real world. So I don't want to like dismiss it like it doesn't matter or inconsequential. But like it all comes down to, does the government support those individuals? I mean, because when you get into the Fed speak, what was it? Oh my goodness, there's so many things. I mean, Powell, I think he today in his testimony warned of mortgage defaults and evictions if there are no more fiscal aid. And so it's not the amount of, I mean, this is the weird, screwed up world we live in. It's not even how many people are unemployed anymore. It's how much fiscal support do they get from the government while they're unemployed in order to not create this huge cascading effect, right? Because these layoffs, if there is no fiscal support for a year, all of a sudden that housing data starts looking a lot worse. The Nike's earnings and the Home Depot's are a lot worse because people are making less money. And so there becomes this domino effect. And this is what we saw in 2008 and 2009. It is that when the layoffs started and we weren't just printing trillions of dollars, well, people had less money to spend. People lost their homes, foreclosures went up, and it just had this huge, massive domino effect. And so, I mean, that's why the fiscal stimulus is so critical, because it helps prevent the domino effect, where people don't pay their credit card bills, where people don't lose their homes, where people aren't evicted, where people have still some money to spend on goods, which are reflective in companies' earnings. And so it's the domino disaster that we're trying to avoid with the Fed policy actions and fiscal supports. Because if that domino action were to happen, I don't know where the bottom of the market is, you know.
Mm-hmm. So out of the Fed speak, was those the notes that you had caught up on? Is that?
I mean, what do you got on Fed speak? I got a bunch of Fed speakers basically saying we need fiscal stimulus. Like Powell said it. Fed President Loretta Mester out of Cleveland said fiscal stimulus was very much needed given the deep hole of the economy. Boston Fed President Eric Rosengreen said that it's not the most difficult part of the recovery is still ahead of us, and we need the fiscal stimulus. And I got a couple others. Clarita. I didn't hear from Matt's boy Karkashi, but everybody else seems to be like, hey, we need more money. We need more money. And they've been saying that for months and months and months.
I I had a picture of Karkashi, his little screenshot, and we were done with the scouting report meeting the other day, team, and I brought up this picture of Karkashi, and I just put up his eyes for everybody to see on my Zoom, and it freaked everybody out.
It was creepy.
It was very creepy. I loved every second of it.
Yeah, I mean, that close-in zoom up of, hey, I want to print all the money in the world, inflate you to the moon, and destroy the economy. Yeah, it was creepy, Matt. There's no question about it. Don't do that again. Don't do that again.
Oh, I'm going to do it every week. What are you talking about?
Now it's going to be in everything.
It's a thing.
Let's flash through the markets here, Matty. Crude oil, gold, the rest of the commodities markets, and then with the currencies as well. Then I want to get into individual companies if we can. I don't see much in crude chart, but go ahead and break those things down as you go.
No, analysis remains the same. I mean, I talked about yesterday the potential of a K trade forming between 39 and 41. I'm still looking underneath 39 as confirmation to the downside. And until it breaks 41 or 39, there's nothing to see here. However, if you do break 41, okay, if you do break 41 on the top side, you have a confirmation of a pivot high and a pivot low. So even though it's crazy train right now in the oil markets, unlike the previous couple months, you do have scenarios where trends are starting to develop here. And so it's going to be interesting to see what happens in the short term. But right now, nothing really to update. It's 39 and 41 and let the battle play out.
Yeah, I agree. You know, I just cannot ever get over the quote now. I'll never get that out of my head, though. And Mark, the old saying you used to have was the Saudi princes have your back. They seem to have your back right now. We're stuck in the mud on the chart. But
do not test the resolve of the block.
I literally been saying it for
of the kingdom
now.
Do
the kingdom.
You think, what Star Wars movie did they get that from?
I don't know, but it's the best line.
That feels like a Palpatine quote.
It feels like a Palpatine quote. It does.
Yeah, it feels like Palpatine to me. Yeah. Gold here next, trying to, at least have a little inside green candle after it broke down below support. Gold trying to find. I still want to test
the result, by the way.
I know. I know you do.
It makes me want to short oil so much.
I don't know.
It does. I'm emotionally invested here.
I don't want to fight those princes.
I'm not a fan of Saudi Arabia or their princesses.
I get it.
So
I get it.
So I kind of want to fight, but
that is not the official statement of the halftime report here out there. Saudi princes, Coach Tim here would never test the resolve of the kingdom. Yeah, I get it. Matt, let's take a look at gold if we can here. Trying to find 1850. I know the 1800 was the number we're watching. Same thing though. I mean, even when you got a green day like today, guys, you got a lower candle high and a lower candle low. You're developing a lower pivot low. You just broke support. I don't know where that next potential support is outside of that 1800 number. Looks like an obvious one to me.
1870, 1750, and 1724.
Is that where you got it? Yeah. Yeah. Okay.
Oh, did you want me to analyze now?
I don't know. What else you got on this one?
There's no real support. I loved your word earlier today, Mark. It's a reprieve. Right. This is a takeoff day. Okay. What's really happening in gold is support is not forming. That's not what's happening in gold right now. What's happening in gold right now is simply the dollar is overextended in its upward trajectory off the reversal trend. And so the dollar's overextended in its trend, and you're seeing the dollar show a little bit of weakness right here today, just simply because it's overextended and probably needs to retrace. So what's happening on gold today has nothing to do with gold, to be perfectly honest. The dollar's just overextended. Gold, I wouldn't even say gold's, you know, overextended to the downside here. I still think it does have room to go down, but dollar being overextended to the top side, looking for a little bit of consolidation, maybe a pullback in the dollar, it's going to give gold a little bit of a support just simply because the dollar's at resistance. So for me, you're not really seeing a support level form as of right now. It could form historically, no doubt about that. But as of right now, it's really gold is slowing down because the dollar is slowing down from the top side. So dollar's hitting its head on resistance, seeing a little bit of downward movement in price, gives gold a little bit of a floor in the short term. But no, this isn't a scenario where you're like, oh, look at that inside candle on gold. Let's rock and roll here. No, that's not what's playing out here. You still got a downward trajectory on gold, perhaps at 1800, perhaps at 1750, but you still got to be looking at downward movements in price. If you're looking to invest in gold, I'd be a little patient here. I'd be a little patient here. And from a fundamental perspective, I'm sold. Everybody knows that. I believe in the gold argument. But from a you know, trading perspective, you got to look at some type of technical movement where you get a double bottom, double top, and looking at the breakout here. So with the dollar starting its upward movement in trend, hitting resistance, gold's going to have a little bit of a slowdown effect on that, but that does not change the current short-term trend. Short-term trend is still bearish in gold. I still expect downward movements in price. Post 1850, I'm looking at 1800 to 1750.
And that might be the word of the day there, Mark. I'm glad you brought it up. Reprieve day, you know, just that nice little reprieve day.
Oh, I spoke that from my soul. I didn't come in saying, you know, this is what technically, this is a great term. I was like, I felt reprieve.
There you go. It just,
because I mean, like as a huge cash flow guy, I mean, these days are like, oh my gosh. Once again, I can go have a good evening and I can think about it and I can not make knee-jerk reactions. But that's also based on technicals, right? Coming at that 3,200 level, expected maybe a bounce for different reasons. And so don't do, I mean, it's key. And Tyler talked about this a lot the last couple of days, not doing things out of emotion, being as stone cold killer as you possibly can.
Yep. Matt, you had
mentioned. No, and I agree with what Robert's talking about, right? On both points, Robert. Big Daddy Pal. I like that one. Big Daddy Pal. Big Daddy Pal coming to the rescue. I have seen multiple times in the last couple of weeks about them talking about, hypothetically speaking, about the potential of direct deposits, helicopter checks. And Milton Friedman, who's the economist who really supported helicopter checks back in 2008, 2009, I struggle with this conversation, Robert, to be perfectly honest with you, because I wouldn't do any of it. I wouldn't do the bailouts and I wouldn't do helicopter checks. I'm a fiscal conservative in that capacity. Call me crazy, call me old school, call me old fashioned, but I am a fiscal conservative in that capacity. So I wouldn't do any of them. But if you believe what the Fed is saying, that they're having a difficult time sparking inflation, okay, one of the reasons why the world is failing in sparking inflation to the levels they want to out of Europe, Japan, the US, and China specifically is because it's not just their dovish monetary policy that creates inflation. It's where that money goes that creates inflation. And so, for example, when you do bailouts and when you do stock buyback programs, when you do all these injecting liquidity into the marketplace, it doesn't have a massive inflationary impact because it typically just goes to corporations or other banks and they just kind of park the money. True inflation has velocity of money. And so right now, in the way our world has embraced the fiscal monetary, or excuse me, the dovish monetary policies out of the central banks around the world over the last 20 years, but specifically over the last 12 years, you used to have this back when we were turning and burning back in the 80s and 90s, guys. We had a 3.5 to 4.5 utilization of money because the majority of the money in America was into the hands of the people. And what do we know about people is they like to spend the money. And so it creates what is known as velocity of money, and $1 can actually have a larger economic impact than $100 if it's into the hands of consumers who actually will spend the money, and corporations get the money through economic activity, through consumer spending and whatnot. And so if you do want to spark inflation, the best way to spark inflation is helicopter checks. That is the fastest way to spark inflation because it creates velocity of money, and that velocity of money therefore goes to the corporations through economic activity, and thus corporations get the money at the end of the day. The economy improves, consumers get their TV or their whatever it is they're looking for, whatever the case might be. So what Milton Friedman would say is, well, yeah, let's do helicopter checks. Let's do direct stimulus into the consumer base, into Main Street, if you will. Main Street will spend the money. Corporations will get the money at the end of the day through consumer spending. The economy improves. Inflation hits their target between 2 and 2.5%, and everybody's happy. Consumers are happy. They have a better lifestyle. Corporations are happy. They have better revenues. Investors are happy because revenues are going up. It's one of those scenarios where everybody's happy, but you run the risk of hyperinflation, right? And that's why I would never do that. But if I was the central bank president for a day, I would much, much, much rather support about 90% decrease in the balance sheet, but put that into the direct consumer's hands, because corporations and banks would get the money at the end of the day anyways. And so I struggle with it, Robert, no doubt about that, because I am a fiscal conservative. But if we're going to do policies that do run the risk to hyperinflation, I would much rather see velocity of money increase, and thus the economy and GDP of the economy improve, and it lifts everybody up as a whole instead of just a certain segment of the population, i.e. corporate America to a certain extent. Mark, you called me a top-down economist from the stock market, and I am. But I am a bottom-up economist from those are the economic philosophies I believe in. Is old school capitalism, is what I'm an Adam Smith type capitalist. Okay. Adam Smith was a bottom-up economist. That's who he was. Small business creation. Let's create a monetary and fiscal environment to really encourage small businesses and so on and so forth. So I saw that the other day, Robert, and I've seen them talk about this a couple times about direct deposits to consumers. And initially, I don't like those policies, but I like those policies far more than what I see is just cash grabs and bailouts to corporations who run failed businesses. And so in my opinion, and this is just my opinion, I wouldn't do either one of them. I miss the world of a free market. I miss the world where you let companies fail and so on and so forth. But if I had to choose between one or two policies that have the ability to create hyperinflation, I would choose direct cash deposits to consumers. I would support helicopter checks more than I would support the bailouts. But again, I want to be clear, I would not do either one of them. But if you had to support, I would support consumers over corporations.
Mm-hmm. Yeah, I mean, printing money, obviously, doing helicopter checks. I just did some math here. There's 331 million Americans. A $5,000 check would cost the Fed $1.65 trillion. That's less than half of what they did earlier in the year with all the QE type programs, Matt. So I don't know. I'm with you.
Oh, Tim, the reality is you could have the same economic impact with 10% of the utilization of money if you were doing it through an efficient methodology.
Mm-hmm.
And that's what's really frustrating to me is these failed economic and fiscal and monetary policies. It's a rinse and repeat of what happened in 08 and 09. But what happened in 08 and 09, it didn't fix the underlying problem. And the underlying problem is the debt of America. We have not reset the debt scale in the last 25 years. That's the first time that's happened in American history.
Mm-hmm.
And so we just continually push the debt scale out further and further and further and further. And so these underlying financial, fiscal monetary policies that have been adopted for the last 10 years and have continued in the last 4 years, these are not good for long-term America. They're just not. And I truly do believe, and I don't want to get into this conversation, but I truly do believe a lot of the angst in America is based on central bank failed monetary policy that has created income inequality.
Mm-hmm. Yeah, and an evaporated middle class has been happening for a long time as well.
Yep.
Yeah, yeah. All right, guys, let's keep moving
America
through.
thrives not when corporations thrive, but when the middle class thrives.
America thrives not when corporations thrive, but when the middle class thrives. I agree with that 100%. Let's keep working through the markets if we can here. The dollar next, if we can, Matt. You were talking about the little bit of a sell-off in the dollar, a little pullback. One red candle here. In fact, it's going to be, kind of just the opposite of what you're seeing in the last 4 or 5 days out of gold, quite frankly. Nice little breakout on the dollar on volume, red candle here. Matt, how do you read that chart right there?
I just overextended, look for a little bit of profit taking. You've started a bullish uptrend, which should have a negative impact on gold. I don't have anything to add other than what I said on gold.
Mm-hmm. And there's going to be a lot of currency pairs developing, Cody. Actually, I think you're going to have more interest in some of those Forex reports here coming up as the dollar starts shaking up and moving. Dollar CAD broke out, across many different cross pairs. So looking forward to that Forex report over the weekend.
Definitely going to be a fun time. We're actually seeing some movement again.
Getting some action. Yeah.
Much more fun.
Outside of that broken range that was there for a while. Let's move on to individual companies if we can. We had a couple earnings updates I wanted to get to first here, Matt. CarMax, Darden. We can start with either one of them that you like, and let's roll with those two.
Yeah, let's start with CarMax here, KMX. CarMax, nice little fundamental company. When I first analyzed, CarMax not a TACO 25 stock this year, but it was a TACO 25 stock the year before. CarMax comes in with a really, really robust EPS number here. They came in at $1.79 versus the expectation of $1.03. Revenue came in line with 5.4 billion versus 5.2 billion on the expectation. Revenue grew only 3.3% year over year, which is a little bit concerning. But you might ask why CarMax is down on a day when they had such an amazing beat on EPS and a slight beat on overall revenue numbers. Well, when you break down their revenue numbers, it gets a little bit more concerning. Sales year over year only increased at 3.9%. Comparable stores only increased at 1.2%. So where did the revenue come from? And this is kind of a shocking and sad statement about consumer America, but it came from financing division. The financing division of CarMax increased 29% year over year. And so a lot of their positive EPS and revenue numbers that they came in today was based on financing, which has to be a concern moving forward from a debt burden perspective on consumer America. When you see same store sales at 3.3%, revenue increase at 3.3%, sales increase at 3.9%, comparable stores at 1.2%. There's enough shade there to drive this down, right? There's just not that level of report to see that breakout of 109, 110 here. I got this as a sell. I would actually look to downgrade here. I expect a 200-day moving average bounce on CarMax.
And obviously, we're not in the thick of earnings season here, Mark. But through the month of September, when markets have been a little bit more bearish, we're starting to see markets punish companies that don't come in and absolutely destroy it and give upside guidance and get the triple whammy like Matt talked about the other day. CarMax disappointed.
It's a different environment, though.
It just is.
It is not talked about enough in the marketplace and traditional media out there about how the Fed has changed the ball game with those 2023 projections. By putting a date to it of 2023, that is not a positive economic thing. That is not showing confidence to the market, to the recovery. And putting a date on that, it wakes up the market to be like, oh wow, we're paying for growth today and we're not going to get it till 2023.
Mm-hmm.
That's not talked about enough. And so whereas last quarter, I mean, Tim, honestly, the earnings numbers this quarter, and we only have a few earnings reports, so we only get like 2 or 3 a day here. But the so far earnings quarters, they've been good. Mm-hmm. They've been good in terms of beats on EPS and beats on revenue. They've been good. But you know what has not been good? Price performance. Mm-hmm. Outside of Nike and a couple others, price performance hasn't been good. And if you're and unlike last quarter where we were kind of working under the presumption of, well, economically we're going to be here in 2021 or 2022. Now we're working under the presumption that we're going to be here, we're going to be recovered economically by 2023. It's a different beast. The market had an amazing quarter last quarter. It's a different beast. You're comparing the numbers against now a backdrop of 2023 instead of 2021. It's a different it's a different level of analysis.
Mm-hmm. And when those, kind of conditions change in the underlying, and we start to see trends in the way behavior of just earnings responses happen. I mean, for veterans, that starts telling us something about, just price action, underlying sentiment, all that kind of stuff. It's becoming very, very clear.
All I know is you better perform. You better show me something in this earnings season.
Mm-hmm.
You better show me during the heart of elections, prices overextended, the market recovery in the last 6 months, the election coming at us, just 6 weeks from now. Man, no growth till 2023. Man, you got to impress.
Absolutely.
CarMax's report was not bad.
No, the numbers weren't
It
bad.
was not bad.
Mhm.
The punishment was bad because it's a different environment today than it was 3 months ago.
Mm-hmm. Yep. Did Darden impress you?
Did Darden impress me?
Mm-hmm.
Did Darden impress me? I got a few things to say about Darden here.
Before you get into the numbers, because obviously the market response here, I got a question for Mark. Mark, how many of the Darden restaurant brand names do you think you can name? They're a conglomerate.
Oh, that's
Garden,
a good game.
Olive. I think I know these. Olive Garden for sure.
Olive Garden's like the major one. That's one of the major ones.
That's the big one. Mm-hmm.
I'm gonna do this too.
They own the steakhouse. They own Longhorn.
Longhorn Steakhouse. Yeah.
And the only other one I can remember is Bahama Breeze.
I did not think you would get Bahama Breeze, but
I just remember because it's alliteration. Bahama Breeze, right? Like those are the only thing I can remember.
Cheddar's is the only other one I can name, and the only reason I know that is because I like the name Cheddar's.
Yeah. I'll give you some of the other ones. Yard House. I've been to a Yard House or two in my life as I was traveling. I think there's one up in Seattle. There's one in Chicago. Seasons 52, Matt, you've probably been to one of those maybe at some point, the fish restaurant. The Capitol Grill, never been to, and Eddie V's, Prime Seafood. So we're not talking about fast food chains here, guys. We're talking about sit-down restaurants and whatnot.
Yeah, they're sit-down.
These are sit-down restaurants, yeah. And good. Mark, you impressed me, and I didn't think you would get Bahama Breeze, but definitely pretty good there. And Cheddar's, Matt, definitely a pretty good one as well. Matt, how are the numbers? Did they impress you here? Because the market response is a little bit more bullish.
Well, you don't know if I'm not impressed by the numbers yet or not.
I don't. I'm asking you.
All right. The overall numbers was impressive, no doubt. I mean, they came in at 56 cents a share versus 5 cents on the expectation. That is a massive beat on EPS numbers. It's a very impressive number on EPS number. Mm-hmm. Revenue came in line at 1.5 versus the 1.5 billion. So, and revenue year over year did decrease 28.4%, which is a nasty number, but it's also better than it was last quarter, right? And so these restaurants saw like 50, 60, 70% decrease year over year numbers from last quarter. So even though it's a negative at 28.4%, it's still a big improvement from what we were seeing last quarter. So I'm taking that as a positive there as well. Increased guidance on EPS numbers, not revenue, but increasing guidance on EPS numbers, a fairly decent increase in guidance. So they saw a massive beat on EPS, an increase in guidance on EPS, a reduction of the year over year revenue from whatever they were last quarter to now 28.4%. What's curious to me and what stands out to me though is why the substantial beat on EPS but nothing on revenue, and why the increase in guidance and nothing on revenue. I think Darden's finding something here, and I think Darden's finding a way, and I think other corporations are doing this as well. They're finding a way to reduce costs without reducing revenue.
Without increasing revenue.
Without increasing revenue. So what's happening here is their EPS numbers are improving, not because the revenue is improving, but because cost structure is going down. Mm-hmm. And consumer behavior is changing to a certain degree. Not a lot of people go sit down any longer, but you know what they will do? They will go to Uber Eats, or they'll go to whatever that is, or they'll go to pick it up at the store and bring it home, or whatever the case is.
Sure.
So companies like Darden, and it should be on our radar here with the EPS speed and the breakout here. I would love a break. I would love a continuation here of $100 here. I think this is a momentum trade, honestly. You trigger in above $100 and you let that momentum run. Okay, that's how I see it. I like the gap. I like the performance on the cash open. This looks like a breakaway gap for me. And a breakaway gap typically means, you know, you gap up on the overnight and you run on the cash open. We're seeing that on Darden. But if Darden has found something in their special sauce here about reducing cost structure without reducing overall revenue numbers, you might see something special start to form here. So no, I don't have any shade to throw on Darden. I'm just curious to dive into the detail on the data from an EPS versus revenue number, because that EPS number was astonishingly good. It was an amazing number.
Mm-hmm. It's impressive, and I love the take there in the analysis, man. I'm going to have to wrap my head around it, but the EPS numbers going up, revenues are actually decreasing a little.
Well,
you know, here as well.
And again, that was not what caught my attention, because I've seen that many times, right? Everybody has seen a massive beat on EPS without revenue going up, but it was their increasing guidance on their EPS without their increasing guidance on revenue. So Darden not only did that this quarter, but they saw in their data for the next quarter saying, no, we see this continuing. And so we're going to increase our guidance on EPS, but we're not going to do it on revenue. I think Darden might be onto something here. Cost reduction without losing overall revenue.
Mark, your instincts around restaurants have been anything with a drive-through, but we're seeing one of the brands here that doesn't have, it's not really a big drive-through brand here that is actually performing from a price perspective with a gap out and a break and a potential momentum play above 100. Does this make you at least try to rethink what your approach is with restaurants? I mean, what's your take on this one here, Mark?
I mean, listen, I think Matt's analysis was spot on, and it's why I'm a bull, period. Aside from the macro reasons, companies will do everything they can to survive and make money. This is what they do. And if you have a company that doesn't, then you should really reconsider why you're investing in it. To be able to make money in these conditions is extremely impressive. They're in the epicenter of things. It shows and says a lot about management. I think Matt's analysis was spot on. Is it more of a trade than an investment? I don't know how much room you can go. I mean, it's not cheap, right? And I still worry about COVID. And if I'm going to make COVID bets, they're going to be on cheap stuff. But eventually we're going to return to normal. People are going to be sitting down. The fact that Darden could do this in these conditions, I think speaks well of the management, speaks well of the stock itself.
Yeah, absolutely.
Yeah, and I'm not a Darden guy. I like what I'm seeing in the numbers. I like what I'm seeing in the increase in EPS. It goes to show me that their leadership is seeing something in the data that's been impressive, but I am seeing this as a momentum trigger, right? I'm looking at this as a swing trade above $100, momentum style trade, aggressive stop loss, cheap risk, hope the momentum flies. You don't have a lot of anything until you get to that 107 and a half range. And so there's a lot of clear air right there at that significant whole number of 100, all the way up to that previous support pivot right there at 107 and a half. That was pre-pandemic type pivot. So I just like it. I don't get me wrong. I do like the numbers. I'm not a big fan of the company, but I do like the numbers. I just see this as like a cheap risk for a potential pretty decent return up to 107 and a half. And that's on the presumption that it breaks that significant whole number of $100. It's not shocking to see the high of today, guys, really kind of form at 99.60. That $100 mark is such a significant number. And you know what? I'll just, Coach Frank will be with us tomorrow, and everybody loves Friday Frank Day. But I'll tell you what Coach Frank would say. He'd say, give it 2 to 3 days to cook. Give it some time. Put it in the crock pot. Let it cook a little bit. Then that breakout's even more legitimate at $100.
Dude, I love a good crock pot, especially in the fall. It is a wonderful time to throw
crock pot might be my favorite invention of all time.
Oh, what a wonderful thing. There's no question about it. A couple of days to cook, let it chill out, and then that 100 in play. We'll ask Frank about it tomorrow as well. Let's keep working through a couple more corporate notes. Matt, let's bring up ByteDance, bring up Oracle. Good way to talk about this company. Mark, you had a note on this stock, and I see that you just got up and walked away to get your, I'm guessing, is it just
well, you guys only spent 14 seconds talking about the dollar.
Dollar's already dead. We've moved
Dollar's
on.
done.
Yeah. And my
I
new
know you didn't
favorite
give me
thing,
time to
Matt,
go do my things.
whenever Mark gets up to leave, I'll bring up a stock that he brought up in pre-production. It's my new
Every
favorite
time.
thing to do.
Every
You're
time.
such a
Every
dick.
time. Yeah, but it's well deserved, though. Well deserved.
Marky, you still got your headset on. We're good, brother. What was your update on ByteDance and Oracle? I saw.
Well, I mean, we've been talking about the whole ByteDance TikTok thing all week, and listen, I mean, this is another. I mean, it's just why the halftime report and the stuff we do is just always 2 days ahead of things. Like now you're seeing headlines. Oh, deal is being threatened, this and that. We've been talking about what the Global Times has been saying out of China on the TikTok deal
Matt,
as
what
early
we just
as.
heard was filibuster. I don't know if you're picking up on that. That was filibuster till he could get back to his desk.
Oh yeah, I know exactly. It wasn't just you or I that picked up on that. Like all of halftime crew was like, "Yep, Mark's filibustering. He's trying to get back to his desk." Yep.
Anyway,
Enjoy yourselves, all right. But no, I mean, like the Global Times, the propaganda out of there, they've been signaling that the dignity of China and national security has been threatened. That there's just real. I mean, I'd be shocked to see this deal get done under its current parameters at all. China is signaling that no, they're not signing off on it. And
What
if China
is China doing? I don't get it. I maybe I'm misreading this here, but I thought Trump signed off on this deal and gave ByteDance ownership.
No, Chinese state media is starting to come up and ramp up their
commentary
about it, basically calling Trump out, saying, "Hey, listen, you're strong arming us. You're acting like."
I got Trump capitulating on this deal.
Yeah, but
He
ByteDance
was,
actually
he was
filed.
talking about how not trusting China with our personal data. China still owns the majority stake in TikTok Global. I mean, what's China
No,
doing?
and
What does
Fox
China
and
want?
Fox News, Fox Business is a couple days behind us, and they're publishing rumors today that the whole deal is falling apart. So
I know, but I'm just like, what does China want? Other than just to
Maybe just
they've got
stick it
yelled
to
at for
Trump.
like 3 straight months, and so finally they're like, maybe we can fight back here a little bit.
I mean, well, in all of their rhetoric out of the Global Times, they have used the word dignity. So they are offended at the parameters of the deal and how this is going.
I'm offended.
So
I'm offended that you're allowing a majority stake. Hey, China, why don't you let all our companies and websites open source in China? Then we can talk. Get the hell
don't
out
talk
of here,
about
China.
consistency.
Seriously,
Listen,
get the hell out of here.
That's
China.
not part of the
Whatever.
conversation. We don't need consistency.
Hold on. Seriously, China, your dignity is hurt.
Right.
You got your feelings hurt, China? Really? Feelings hurt? Dignity? Oh God, get out of here.
You do have another deadline on the 27th that the Commerce Department has said that they're going to take, TikTok off the App Store and all that kind of stuff. ByteDance did file for an injunction against that shutdown, Mark. We haven't got word on that legally yet. Do you guys, I mean, last week came and went. They gave it an extension.
What are they talking? Trump gave him a softball. He threw him a softball pitch. China, do your job. Hit it out of the park. What are you talking about? Take the gift and run. You want to increase tension over you ByteDance maintaining ownership? You maintain controlling ownership of TikTok Global and you're complaining about dignity? State-run media, get the hell out of here. Seriously. I think I'm trying to offend every country today.
I think
Saudi Arabia, China, just give me a second. I'll get North Korea in there.
Don't go after my good friends in Canada or Mexico. Let's leave the USMC pact intact here. No lobs thrown here today. We don't got Coach Greg to defend it. So let's leave those guys out of it.
I got nothing but positive things to say about everybody from Canada.
I got nothing but positive things to say about everybody. Well, not necessarily. Penn Gaming here next. Mark, you brought this one up. Gambling stocks as well. There's a couple of interesting notes on this.
Hold on. I agree with what Robert said. I'm not done. Okay, Robert, I agree. Yeah, stop hurting our feelings. Just keep the doors open so they can steal U.S. intellectual property. Seriously, Rob, I'm 100% with you on that. They've been stealing U.S. IP for a clean decade now. Decade. They still get ownership. They still maintain ownership of TikTok Global, and they're complaining about their dignity and their feelings are hurt. Oh, whatever.
Yeah, there's very few things that society can agree on, but the fact that China's been stealing IP from us is not debatable.
It's not
Yeah.
debatable.
It's not debatable and it's unacceptable. It is such an important thing that
And
we change.
free Hong Kong while
Listen,
you're at it.
With China throwing a temper tantrum over their dignity today, I'm saying Trump, I'm putting it out there publicly, Trump, shut down TikTok.
Well, the
Trump,
TikTok is
bring it back. Say
but-
we're not doing anything until Oracle owns a majority stake or get it out of here.
well
Play hardball
in
with
a
this.
preemptive move. ByteDance has filed a petition for an injunction yesterday afternoon, asking a federal court.
I hope they filed it in Dallas, Texas.
to intervene and quash the threatened ban. So they see that the deal is falling through, and they're filing for an injunction. So this thing, it would have been a nice
whatever.
gift for Oracle and Walmart, and maybe down the road they get it. I don't know, but yeah, it would have been a nice gift.
Honestly, guys, I had Trump capitulating on this, and I'm not saying that as a negative. I'm saying I had him basically saying, okay, let's reduce tensions, we'll approve the deal. And all of a sudden China's like, no, that's not good enough. What do you think Trump's response is going to be? Hold my beer. Watch this one, buddy.
Mm-hmm.
Oh, come on. Bad mistake. Because Chinese run media, guys, that doesn't happen unless the Chinese politicians are putting that into Chinese run media. That's Chinese government speaking. So no, whatever. Pull the deal. Maybe I'm just speaking my book because I am so sick of my daughter on TikTok. It drives me nuts.
You might be. There's no question about that. But also in that same report from Chinese state-run media, Matt, they were calling out Larry Ellison directly. They don't like the fact that it's Oracle doing the deal. They were very critical of that part of it as well. These two sides are not completely on it.
Oh, okay. They wanted Microsoft.
They did want Microsoft.
They wanted Microsoft. Okay. Well, why don't you just say that and make a deal with Microsoft? And if the deal doesn't get done, why agree to the deal with Oracle in the first place then?
Because they were trying to find a way to agree to it, but not give up majority ownership and still have all of their cake and eat it too.
Who's running this deal on ByteDance front? Uncle
CEO
John? Is
their
Uncle John
CEO
negotiating this deal?
I have no idea of proving this, but this whole thing feels like someone in the Chinese government said sometime in the last week said no. They were thinking about it, and then somebody up top said no, and then the deal's dead.
I'm not.
I just
ready
wonder
to call
what
it
they
dead.
want. I don't think it's dead yet either.
Yeah.
But what do they want?
I think
honestly,
they want 40 days to pass to see who wins the election.
They want the election to pass,
and that's
buying
on
time.
everything, right?
Yeah,
I mean,
they're
China
buying
has
time.
so obviously the last 7-8 weeks been like, listen,
I
we are
get
sitting
it,
this
but-
out, and I think they want 40 days to pass, and then
Listen,
reevaluate
if I'm Trump, I'm saying, all right, China, you want to do that? I approve the deal. I get criticized for approving a deal that I didn't like, and you do this. I gave you ownership, something I disagreed with, but I gave it to you guys because that's what my advisors wanted to do. Wanted to throw you a little bit of softball, maybe reduce the tensions. And a day later, you're doing this. If I'm Trump, I'm pulling the deal, and I'm saying no. I'm banning TikTok. I'm playing hardball.
Mm-hmm. Mm-hmm. We haven't had any word out of Trump yet, but I do not imagine his response would be very positive if they don't get something done, Matt. I'm with you. So he might play hardball, and you do have a deadline on Sunday
You
again.
should play hardball.
You have another deadline on Sunday that if there's not something done, they might stop the downloads on those on TikTok.
I didn't like the fact that he gave in on the ownership because I am concerned about U.S. intellectual property, both from a corporate perspective as well as an individual perspective. So I wasn't very happy he gave in on that one. But to give in and have China do that, if I'm Trump, oh no, there's no deal to be had. If that's me, now obviously Trump's dealing with many variables here. So I'm seeing it from 64,000 feet, and he's in the nitty gritty here. So there's things we certainly do not know, but I'd play hardball. That would infuriate me. It would infuriate me for China to do that if I was Trump.
Mm-hmm. Yeah. Next one, Marky, you had Penn Gaming, I believe, and some news out of sports books and
all
gambling.
of your
Is that
existing
Hold on.
right? Go ahead.
No, I'm done on that one. But before you do the Penn news, Let's do the upgrade downgrade game because there was a lot of upgrade downgrades today.
Sure, we can do that. Actually, I had quite a few of them. Do you want to go through them? You want me to go through them and
What
throw
up,
them to you
H down
guys?
coin? I love Houston. Houston's an amazing place.
Yeah.
Yeah. Do you want to do Penn specifically because Penn's just one of like 8 upgrade downgrades?
Well, not just that. I think one of the notes Mark had on Penn actually was about gambling activity in general, and I think it applies to
And that's why I
DraftKings.
asked.
Yeah. So this isn't just for the Penn upgrade or downgrade kind of situation, but actually the news about the gambling activity I thought was interesting. So why don't you give us that quick note, Mark? Then we'll do upgrade downgrades.
Well, let's just do the Penn news here. First of all, just a note on the thing, sports betting wagers in Colorado for the month of August went up 117% month over month.
Get it on, America.
And this is the theme, and this is why we are bullish on the space, right? Valuation is high, but we are real big believers on the space. Online gambling is going to be a thing, and more states are going to pass, and it just might happen a lot sooner than we think. It's a big, huge thesis we have, and so your DraftKings, your MGMs, your Penn, pick your way to play it. But it's a great space to be in with a long-term vision. Nice data out of Colorado on that. But on a sad note, all of your Penn shares you currently own are worth a little bit less as they are diluting their shares by commencing an underwritten public offering of 14 million more shares. So every dollar they make, you get a little bit less of the kitty on that. And that's a trend we've seen in 2020 a lot too, with individual companies issuing more and more shares. Nobody gets punished out off it except on the day they do it. Pen down big on the news. But in the past, that has been quickly absorbed into price. You saw it on DraftKings earlier. You saw it on Tesla.
Saw it on Tesla multiple times.
And so it is a very common thing to occur. But it is listen, it makes me, when I do my fundamental analysis, require an even bigger discount on that specific company.
It does represent about 10% of the available shares and equity in the company. So, you're getting a 7% correction. It's almost been absorbed into it right now, Mark, if you think about it like that. Obviously we're down near the 50-day moving average. It's not a good one-day response, but investors of Penn, they've been very well rewarded with this uptrend. I understand why the company would do this. I really do.
No investor of Penn is going to be like, oh, we're out. Look at what the market's done in the last
most
3
investors
weeks.
of Penn don't even know what that means. So
Sure.
They could care less.
What do you mean? It means more shares. That's good, right? So,
Is it Macquarie? Is that the financial firm that played the game of DraftKings versus Penn today? I think it's the financial firm Macquarie. So they played the game we played a couple weeks ago, guys, DraftKings versus Penn. And we're going to play a little game today, DraftKings versus Penn here. Macquarie, they downgraded Penn to neutral from a buy, while they simultaneously, and they probably cited a little bit of what you just talked about, Mark, and simultaneously they initiated rankings on DraftKings, DKNG here, as a buy, which basically is shots fired to Penn. They're saying we like DraftKings, and they're obviously looking longer term here. They like DraftKings more than Penn. What about you guys? Long term, not short term. The last time we played the game on Penn versus DraftKings, we were short term trading. And although I do believe both of us won on that one, DraftKings was probably the winner overall on the game of Penn versus DraftKings. Right now, gun to head, long term, holding period, 1 decade, the roaring 20s, Penn versus DraftKings.
Well, I have naked puts on DraftKings. I don't on Penn. So there's my answer.
I'm long DraftKings. I don't have any positions on Penn. I'm holding that DraftKings, Matt, with the intention of a very long-term hold. I'm
sorry. Listen, Davey Day Trader and all his bluster, he has been an absolute wreck.
He did what he was paid to do, and he made Penn a juggernaut.
He sure did.
So he did his job.
Wonderful partnership between Barstool Sports and Penn National Gaming, and he made that Penn a national headline. He did his job.
Give me the brand over the individual. Give me Jordan. Give me DraftKings.
Oh, Swin, I see what you did there. I like Donkey Kong as well. I believe longer term in DraftKings than I do in Penn.
So, Mark, that's a switch from you from about a month ago, though.
Oh, I have not been impressed with Portnoy. Plus, the one before was short-term trading.
Mhm.
You know, and the pattern. And then they both, everybody won, right? Everybody won on the short-term trade.
Isn't it so obvious now? Portnoy just used this whole stock market game to get publicity to Penn National Gaming.
It is to me. I think it's
I mean,
very
isn't it
transparent.
just obvious to everybody
Yeah.
at this point?
Yeah. I don't
That
have a
whole
positive.
shtick of Davey Day Trader was just to get publicity for Penn.
I will grant he's an incredible marketer, but I don't have a single positive thing to say about Davey Day Trader myself.
No, I'm
So
not. I'm not speaking about the
I
human
am.
being. I'm
I
talking
am.
about his job of putting Penn into the national spotlight. He
Oh,
did his job.
he earned every penny of whatever
He
that
did, and then
relationship
some.
is. There's no question about that. Not at all. But Donkey Kong here, by the way, I do like that name there, Swin, as well. And yeah, I would take them personally, Matt. What about you, DKNG or
No,
PENN?
it's not close for me. It's DraftKings.
Yeah.
Like it's. I think Penn's an interesting storyline, no doubt. I think it's an interesting storyline. It's been a fascinating trading instrument, no doubt. But longer term, you know, I'm definitely in the DraftKings camp. I like the DraftKings deals. I like the signings they've been making over the course of the last few months. And I'm with Mark. I believe that gaming is going to be national at some point. I do.
Mhm.
And there is a ton of money to be made here. A ton of money to be made here. So, yeah, I'm in the DraftKings camp.
It's not that often that you see the same firm upgrade one competitor and
No,
downgrade
it's
the other one
they
on the
played the
same
game.
day. I mean, they
They played
literally
the
played the
game.
game.
They
Yeah.
they played the game. Shots fired. They played the game.
McCowery, I don't know how to say that name. So whatever. Macquarie. All right.
Macquarie.
I like it. Well played, Macquarie.
Sounds Irish.
Well played. All right. What you got next there, brother?
All right, let's play. Okay. Agree, disagree. Agree, disagree. You guys are playing the game, Mark and Tim, and I will be scoring this game based on what I would do. So extremely subjective analysis in the game.
Mhm.
Let's go with Chevron here. CVX, and I will not hint towards what I would do. CVX caught an upgrade. Agree or disagree? And not just an upgrade on price. These are more traditional upgrade downgrades. So they got upgraded from neutral to a buy rating. Any agreement here? Let's start with Mark on Chevron.
I don't think you can upgrade anything until the oil stabilizes over 45.
Okay,
So
Tim.
I'm a disagree.
Not even outside that, the energy sector has been the worst performing sector in the month of September, even while tech has pulled back 10%. Energy's down like 13%. I remember that day we had Chevron and Exxon earnings on the halftime report. They always report, and we analyzed those on the same day. Chevron had a little bit better report than Exxon, and so I did have little relative strength. I think the best rating you can give Chevron is neutral. The only way you could even paint neutral is, okay, it's a good long-term play. The dividends will hold it up at some point. I can't imagine a buy rating personally, so I completely disagree.
No, listen, like for oil companies, until you see oil stabilize over 45, American oil companies are going to bleed money. Now, can they do a Darden and pull that around? Well, we haven't seen any evidence, right? So that's hypothetical. Don't like
It's a
betting
little
on
different in terms of in terms of drilling for something versus eliminating employees.
Exactly.
There's a little
right?
bit of a difference there.
You know, and so like until you can see evidence that the company, and not just this company, but all of them, can make money in oil in the 40s, you just got to be very, 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 very careful with American oil companies. And it just
I'm giving both of you a point. I agree. The upgrade to a buy on Chevron is foolish at best. If that analyst walked into my office and made an argument to put Chevron as a buy, I'd fire him. I literally, I wouldn't even ask a question. I'd be like, I'd call security, escort him out the door. What are you doing here? This is the worst performing sector with the worst economic analysis in front of it. This is a terrible, terrible upgrade here. All right, Nikola next. So Mark, Tim, 1-1. Nikola downgraded from a buy to a hold on the day where Nathan Anderson, Mr. Anderson, the short seller who came out with the whole Nikola is a fraud.
Now, was
That's
it a
the
buy
short
to a
seller.
hold? I've got into
It went from a
underperform.
buy to a neutral,
Which
which
firm?
is another way underperform. Okay, underperform would be the same thing. So it's from a buy to a hold, basically. Agree or disagree with the hold rating? Obviously, we agree with the downgrade, but agree or disagree with the hold rating on Nikola?
Tim, you go first.
So it is a hold rating. That's what they're saying.
It is a hold.
Okay. If it's a
If
hold,
you own it, you're not getting rid of it. If you're not in it, you're not looking to get into it.
I agree. I agree with that current analysis. I think going all the way to a sell when you've gone from 50 to 20 on news that's not been substantiated yet, you do not have a Department of Justice investigation actually complete. The SEC hasn't talked about their findings. And quite frankly, the CFO is out there pounding the table saying, hey, listen, we're moving forward with our contracts. I know the headlines are all negative around Nikola. There's no question. It was down 30% yesterday. So if you were going to downgrade the stock, downgrade it 2 weeks ago. Do not give me information 2 weeks late where you're trying to play catch up just because this stock's been pummeled and people are calling your phone and complaining that you had a buy rating. That's garbage to me. I think this is playing catch up. This is somebody admitting that they had the wrong call on it. And I do think that it's fine to have a neutral rating and a hold. I would not have a sell. So I'm okay with the with the neutral.
Mark?
Yeah, I'm a sell. This is a spec play. There's a lot of dangers. There's a lot of trouble here. I like it as a spec play, but not at these price levels, much lower. So I would have a sell rating on this, or a do not touch, or come on, you should have seen this coming months ago rating at these price levels. Valuations off the chart for a company that is under SEC investigation and has zero revenue. I do like some of the defense that some analysts have came defending Nikola. So I think it's worth a spec play, but not at this level. So I'd have a sell rating currently.
Listen, as the Bears have been humiliated over the last 10 years and made fun of for a long time, I'm not going to throw cold water on Mr. Anderson. Not going to happen. But there's some smoke here. There's some smoke here. Now, whether it leads to a massive fire, we don't know. But I'm going to have to go ahead and agree with Mark here. I just, yeah, you're down tremendously, but if you think this thing can't go down another 50%, you're wrong. It certainly can. It certainly can. I have this as a complete stay away until it shakes out. So I'm going to give Mark the point because I also have it as a complete stay away. All right, now let's go Goldman Sachs here, guys. Let's see how you navigate this one. Goldman Sachs gets an upgrade to a buy rating, and the logic behind it is with the increased uncertainty around the election, we think Goldman Sachs is in, not we as in Tackle, but this is the analyst, we think Goldman Sachs is in a prime position to be profitable in that environment. And the first thing I thought about was, yeah, their spoofing department must be really, really, really strong right now. So, Tim, Mark, discuss. Upgrade on Goldman.
I'll go first here.
What did they upgrade to? To a buy?
Yep. To buy from neutral is what I got from
it was buy from neutral.
Yep. Here's the tough thing, because you can't bring technical analysis into it because that's not how the firm was thinking. You're either agreeing or you're disagreeing with what the firm's stance and logic and reasoning was. I'm sure they don't care anything about the chart. So whether we care about the chart or not doesn't matter whether we should agree or disagree with their ranking, quite frankly. I understand the idea that trading firms on Wall Street will make more money in volatile times. We know that to be a fact. In fact, record quarters out of that, volatility we saw in March and April. What did we say during the month of April when we were talking about these earnings that these companies came out and had? They had record numbers of profits from their trading departments. I'm going to agree with the logic they had. I would not agree with the technicals, but I don't think that came into their thinking at all. I will agree with their logic and agree with the upgrade.
Yeah, I'm a hold. Listen, the trading revenue, we know these companies know how to make money in volatile environments. We've seen that. We know that. That's just a fact. That's what gives me a neutral rating on it, not a buy, because there's still tremendous. People hate finance right now. The sentiment on finance is about as sour as anything. The macro environment is very problematic for finance in general. And if you don't have fiscal stimulus, pals, they're warning on the hill. There's a lot of domino effects that can come out. So the trading revenue doesn't have me scared of Goldman, but it doesn't have me robust either. So I'm a hold on Goldman. I'm not a buy.
It is. Both of you two lose a point. For no other reason than it's me judging the game.
But I even thought about
I'm gonna
that.
give my answer.
What
right?
are you doing?
I even thought about that, but I'm like,
What
listen,
are you doing? It's
Yeah.
Goldman. It's me judging the game. You're both losing a point. We disagree with that.
Well, no,
So-
listen. Tim said buy. I said hold. There has to be a sliding scale here.
analyst
There-
said
I
buy.
almost only subtracted a point from Tim because of your hold rating, but you still spoke even slightly positive about Goldman. So I'm reducing a point for both of you. Now, next we have FedEx though. FedEx, been a juggernaut here, guys. Just one of the best performing Dow components, if not the best performing Dow component. Now the number one component within the Dow, FedEx here, a great industrial play, transportation play. FedEx got an upgrade here today. What do you guys think?
100% agree.
I 100% agree too. Like, listen, I've been a little slow on the whole FedEx UPS. Karen, I can't remember what, not as Karen, the woman on CNBC Fast Money, that was her final trade of the day. I liked her analysis. You got chatter out there that it's a vaccine play, and if it's not a vaccine, FedEx kills it if COVID hits. So it's one of those rare companies right now where you have strong themes, no matter how COVID plays out. The sentiment behind FedEx, I don't think there's any sentiment higher out there on a single company right now, to be honest with you. So yeah, I don't think you can go against the buy.
The only thing I'll criticize the analyst on is that they should have done this 8 trading days ago when they had the day after their earnings. I mean, I don't know what the hesitation or the slowness is to it. If they were watching the halftime report, Matt, when you were breaking down FedEx numbers on that gap out, FedEx has clearly been performing very strong. Trends are strong. Now, obviously, the chart is even catching up, but that's not why they do downgrades. And so they're playing a little bit of catch up from that a week and a half ago. I think they could have done it earlier in the week, but I 100% agree with the upgrade.
Yeah, I agree with the upgrade here. The only thing you could probably shade is they should have upgraded a long time ago to a buy hold, a buy rating, because they did have it as a hold. So you could throw a little shade on them, just being late to the party. But I'd rather be late to the party than not be in it at all. So this is a company that you gotta like, and I think you gotta like it coming into holiday season a little bit, guys. And I'm just spitballing here, but I mean, traditionally speaking, we've seen trends move to cyber so much, but in this environment, guys, don't you think shipping companies are going to do fairly well in holiday season?
I'd guess all my shopping will be online, so I will.
So I mean, FedEx got a lot going for it. It's definitely should be. Expect even from a short-term trading point, it should be really high on the list. There are and I got to reiterate because I think it's so important, and where you have a sentiment battle going on in the market. I mean, the market's halved from its highs. It's done, like it's selling off right now as we speak because I guess the reprieve is starting to end. There are very few companies out there right now with a stronger sentiment across the board than FedEx has right now.
Mm-hmm.
Got a lot of themes going to it too.
You both get a point. I'm with you on that. I like FedEx. Think it's a good upgrade there. All right. And we got Bed Bath and Beyond here. Bed Bath and Beyond. Bed Bath and Beyond in front of earnings, guys. In front of earnings gets an upgrade to outperform. And so I'm assuming this is outperform the marketplace. So agree or disagree, not necessarily with an upgrade to a buy on Best Buy, but does not Best Buy, I keep thinking Best Buy, Bed Bath & Beyond, does it outperform the S&P 500?
Dude, Bed Bath & Beyond is going to go bankrupt one day. So I strongly disagree with anything that says buy this company at all. Where are the secular trends for this company, right? Where is the unique positioning? Where is the product lines that can only exclusively be gotten there and nowhere else? It's a dying place. Feels like GameStop to me, so I strongly disagree.
Oh, GameStop reference of Bed Bath & Beyond. I don't know if I agree with the GameStop reference.
I'm going to golf clap for Baird, by the way. I appreciate a firm that will call its shot. And I got to tell you that this is not a stock I trade or invest in hardly at all. That was a beautiful triple top breakout, though, on nice volume just a little bit ago. Just from the pure perspective that you've got an uptrend versus the S&P in murky waters right now, trying to find support in front of earnings. I'm going to give it an agree. I'm going to take the opposite side of Mark here, just to try to, think through this from a different angle. And good job, Barrett. I mean, not many. I was just criticizing the other firm for being late to the party on FedEx. They're at least coming out and saying, "Hey, listen, we believe in what they're doing. They've got earnings next week. Hold my beer and watch this. We're going to upgrade them right in front of earnings." So I'm going to agree.
The GameStop reference, I don't think there's a scenario that exists where GameStop exists in the future, wherever that future may hold. Bed Bath & Beyond, although I do have the same concerns from a brick and mortar perspective that you do, Mark, I don't think it rises to the level of analysis against GameStop. And you got to give them a little credit here, upgrading in front of earnings, front running it a little bit. But for me, it's a technical breakdown. You're sitting on support on the market. It's clinging to live support there versus Bed Bath & Beyond showing a little bit of a breakout 2 days ago. So I'm going to agree with the outperform. Now, if it was a buy rating, I would obviously disagree with that.
Now, all you're having is
perform.
All you're having is a run up into earnings that you see on these algo programs so often. That is all that's occurring in this run up. So
you can't blame the algos on everything.
So listen, well, it's not human beings making rational decisions. I know that.
Well, human beings and rational. I don't know about that one.
All right. Breaking news. What?
Hold on. We'll do breaking news here in a second. Tie game, last one. See if Tim can beat Mark. And this is a price upgrade. This is a price upgrade. It is not a traditional upgrade. And we're going to go with Google. Setting on the 200-day moving average. You got your interest has to be peaked a little bit right here with Google on the 200-day moving average, really fighting for that $1,400 level. They got an upgrade from a price perspective from 1,760 to 1,800. A price upgrade with the stock that's been going down 300 points. You got to give them credit here, upgrading on the 200-day moving average, Tim. There is no shade to throw there. Do you agree with the $1,800 price target, though?
Man, that is an interesting one because they only raised it from 1760. So they're coming out in the face of a pretty good price target. It's not like a firm who didn't already have a good price target. They had a 1760 target. They raised it to 1800, popped it by 40 points. I like the gumption here. I like the bravado of saying, "Hey, listen, we believe in this stock. I know it's had a huge correction. We're down 300 points from the high there, obviously, around 25%. That's bear market on territory for Google, and yet they're upgrading price in front of it." That being said, bravado isn't enough to make me want to agree with it. I'm going to disagree with a price target upgrade when you already had a pretty good price target to begin with. If you want to hold it, I would have agreed with a hold. That would have been fine. But I disagree. I don't think you needed to upgrade based on the information that they currently had.
I mean, what are they, day trading, playing a bounce off the 200? I mean, these analysts give these long-term investment ratings. It seems like this was just another try to sell side jack price up to get the algos running. So I disagree as well.
I would like to know what they're looking at to justify an $1,800 price target. Those $1,800 price targets, guys, those are not fundamentally driven. They're technically driven.
Mm-hmm.
So like the traditional upgrade downgrade, that is fundamentally driven for the most part. But the price upgrades or downgrades are technically driven. I like Google here on the 200-day moving average. I think it's quality company with cheap risk. So I do like it here. You'd have to see a little bit. You need to see a little bit more battle at the 200, and you need to see a resistance level broken, and you need to, at a minimum, reclaim the 9 EMA. But I do like the support level of $1,400. So that's number one. But even if 200-day moving average holds from a technical perspective, you got to navigate all those downward moving averages. You got to navigate 1475, 1500, 1555, 1575, 1726, and then $1,800. there is too much overhead resistance to justify an $1,800 price target. I'm going to give you both a half a point, which means I am technically ending you both in a tie at 2.5 points.
Tie ball game. I like it.
No,
Nothing
I'm
wrong
ending
with
it
that.
at a tie because I know that's going to infuriate both of you too.
Oh, yeah, I don't mind ties.
Oh, are you kidding? That's a win for Tim. Are you kidding?
Yeah, Tim takes that a win. Mark's like, tie?
I'll take the
so.
tie. Yeah, I'll take the tie.
Breaking news, stocks reversing, selling off about half of their gains so far today on a report that there are no talks scheduled between Pelosi and Mnuchin. I mean, listen,
What?
I know, right? Right. It's like, oh, did everyone just expect it? I mean, they're just making up headlines now to try to explain price action. Like, oh, what? Did you guys think that the stimulus deal was closed, people?
Or the market was just overextended on the short-term chart and it just hit its head on a resistance and pulled back, forming a bullish retracement.
I mean,
Yeah.
just stop making up headlines.
Come on, get out of here with that headline.
Literally old support intraday, new resistance.
Yeah,
is like
seriously.
bang, bang right there. So,
Was anybody, and I'm dead serious, guys, was anybody in the market expecting Pelosi and Mnuchin to be talking right now?
That's why it's so comical, right?
Yeah.
Like anyone?
I don't think so.
Oh wait, like one person? Like some dude in a basement in like the Midwest somewhere? Anybody? Yeah, okay.
Nope, not me. All right, guys, very good show here today. Let's start wrapping it up. Obviously, looking forward to tomorrow when Frank joins us. As always, Friday Frank Days, a lot of fun. We come in, break down the charts, all that kind of stuff. By the way, he has a bunch of really good charts out there on the Twitter account here today as well. He brought up Spotify on that bear retracement yesterday. He's brought up Google as well, the one we just analyzed, talking about that 200-day moving average, kind of test. Frank is a wonderful follow on Twitter at Tackle Trading. If you don't currently do it, find him, follow him. You'll thank me for that. I can guarantee you that. Matty, final thoughts from you, sir.
Oh, just this is the last day of Fed speeches. I can't wait till no more Powell and Mnuchin on the Hill. I look forward to that. I'll give a little bit of a detailed update just on everything the Fed said, but a lot of that is just going to be, hey, government, can you please help us out a little bit? We're throwing the kitchen sink at corporate America. We're trying our best. We're doing everything we can. We're basically giving everybody money at this point. Fiscal government, can you step in? That's a lot of what Fed and what Powell has been talking about. So I'll do a little bit more of a deeper update tomorrow as we see everything that Powell did talk about over the last 3 days. But I'm Feded out this week. I just can't deal with the Fed this week.
I'm kind of fed out, this year, but I don't think they're.
Is that a new thing? Fed out.
Fed up.
No, I'm fed out.
Fed out. No, Fed will never be
fed
out.
it. No, you got to combine.
I understand. I'm not
bro.
liking it. It's not grabbing me for some reason. I'm gonna have to
You're
let that
from
one
Utah.
sink in.
You should be all about that.
I'm fed it up.
No, not up. I'm fed it out.
I'm
fed
out.
it out.
I don't know. I think we got to work
String
on
it
that
together.
one.
Fed it out.
Marky, final thoughts from you, sir.
Just be careful. This technical battle is going to play out for days. We might get a few days of reprieve here, but the real battle's probably heading with the Monday cash open. So just position carefully the next couple days. Monday is going to be a big, huge moment in this market.
Kane, on Costco, very quickly, you have a head and shoulders pattern developing that if it does reclaim 350, you got to buy there. It would be a technical buy there on the breakout targeting the previous high. But you have earnings. Yeah. No, earnings was today.
Was it today? Or is it?
Yeah,
but
today.
No, it's got to be AMC.
No, it's today. It's after.
Yeah,
it's after. So you do have to navigate that 350. Let's read it tomorrow. I was waiting to on Costco for tomorrow, Kane. So we'll wait for the earnings and we'll see how the earnings performs on tomorrow. But if we do reclaim that 350, let's read the analysis.
Little interesting pattern there for sure. And that'll be a stock that we look at tomorrow there, Kane. So join us tomorrow during our halftime show. Last thought from me here, guys. I'm with everybody else out there. Be cautious, be careful, but be prepared. I mean, don't ever avoid market conditions. Go out and try to build a plan for them. I thought Coach Tyler, as always, did a fantastic job on the webinar last night. I mean, the power of put options, our Wednesday special. It was a wonderful hour of education. If you've not yet caught the recording, go and give it a watch, you know, and give it a like, give it a share, get the word out there, because those types of educational experiences, I think they can really make an impact for so many traders and investors out there who actually need to learn how to navigate these markets. So go watch that recording. Outside of that, we got Cash Flow Club tonight for our pro members. Marky, who's on the Cash Flow Club tonight? By the way?
The great Gino Poor is on the Cash Flow Club tonight.
Gino.
You know, it'll be interesting to, you know, I'll go check in and see what Gino has to say. Because, you know, the thing about it is about when things are in an uptrend, man, we all think about the same, right? But when things get a little dicey in the short term, it is really, really nice to hear different people's perspectives because it can give you insight. It's the power of community. It's one of the things I love most about tackle trading.
And Gino, being a 20-year veteran of the markets, somebody that's an important voice right now. So definitely, if you're a pro member, come and join us tonight. Get a feel for what Gino has to say. And outside of that, if you're not yet a pro, we got a very simple offer for anybody out there. There's a 15-day trial link in the comments below every one of our YouTube videos. So you can always sign up. You can always go directly to our website as well, tackletrading.com. Come and see what we do on the back end of our pro membership. And outside of that, guys, we'll see everybody tomorrow. We are out.